webinar. Today, I'm here with some good friends, and as we talk about debt settlement platforms today, as I started taking a look at the technology, the understanding of that technology and its engagement from a creditor side, I was a lot more skeptical until I talked to Joy Jackson and Brian Cloud here with us today, as well as Yale Levy to talk with us about the debt settlement platforms and their experience engaging with a particular one, because I wanted to get a better understanding of what are the consumer options, what's the consumer's visibility into the debt collection space. And this experience for me has been somewhat enlightening for me to get a better understanding of how the world is ultimately viewing the debt collection space and how we can bridge the gap and improve the engagement. So thank you all for joining me today. Joy, starting with you, could you tell everyone a little about yourself and how you got to the seat that you're in today?
Yeah, my name is Joy Jackson. I am the CEO of Faber and Brand. We are a creditors' rights law firm based out of Missouri, but practicing currently in 9 states. We do just about everything that you can imagine, and therefore are dealing with a lot of consumers and looking forward to discussing how we can meet the consumers where they are.
Awesome. Brian, I think this is the first time you and I have done a broadcast together. Could you tell everyone a little about yourself and how you get to the seat that you're in today?
Yeah, sure. I'm Brian Cloud. I'm an attorney with our managing partner of Cloud & Willis. We're based in Birmingham, Alabama. We also practice in Georgia and Tennessee. And I just see, Solo as another tool that we can use to try to settle cases or get interaction with the consumers. So appreciate you inviting me to this.
And Adam,
Sure.
I think we both missed part of your question is how do we get to our seat today? The interesting aspect is I'm also a consumer. And before I began my time as a creditor's rights attorney, I had my own experience as a young student dealing with medical bills and collection agencies. And I think that was really enlightening. And I think that's an important aspect for us to remember now that we're on this side of the seat.
I think it's a great point. We are still to this day consumers in so many different ways. Now, Yale, you've kind of worked on both sides of the equation. Could you tell everyone a little about your background and your perspective today?
Yes, my name's Yale Levy. I was previously a owner of a multi-jurisdictional law firm based in Ohio. It was called Levy & Associates. We operated in Ohio, Indiana, Kentucky, Maryland, and Virginia. End of 2022, I sold my practice and thought I was retiring. And then I got a phone call from the CEO of Solo asking if I'd be interested in being their client development director. I was hesitant at the beginning, but once I met him and met the team, it was great. And I'm now on board as Solo's director of client development. And it's been a really terrific ride so far.
And so it was kind of you that brought this to me earlier in 2025. And, at first I was hesitant to say, okay, well, what is this platform? What's my objective? And let's, kind of address the history of the organization as well. And I've had a chance to meet George as well. I did a podcast with him, which we can link below, where it was rather enlightening for me to see his perspective on what he was trying to accomplish for consumers and the route that he took in order to get there. So, what's kind of been the challenge in terms of helping to introduce this product to the debt collection space beyond their general view of, let's call it, debt settlement in general?
Right. So again, collections have been going on for hundreds of years. Since the beginning of time, people have owed debt, and people need to actually pay their debts to keep the credit cycle going. In the United States, as we all know, most people use credit to buy things. They don't carry cash or have lots of money in their pockets to pay for things on the spot, but they use credit to do that. And to keep the credit cycle going, you need to have consumers that use credit actually pay that credit back. So the way Solo works is instead of using telephones and friction and emotions to collect debt, we use technology. So there's all digital communications. People are able to settle their accounts voluntarily. Solo Settle is a consumer-initiated collection platform where the consumer takes the initiative to reach out to the collector that's either suing them or collecting on them and try to settle their debts by making settlement offers that the law firm or creditor or collector can either accept or counter. So the collector is in control of what happens, but the consumer is so wanting to get this settled that they want to try to settle it because there was so much fear and emotions in the collection and shame in the collection process. So by taking out that human interaction, by talking on the phone, by having long hold times, and by feeling shame talking about the money they owe, by using Solo Settle, they could communicate digitally at any time they want, in any place they want, and try to settle their debts digitally by making offers and counter offers until an accept happens. And once that acceptance happens, the Solo Settle platform has the ability to have the collector upload a settlement agreement or settlement docs that we send to the consumer to review and sign by DocuSign, and then they'll return to the collector to process and file with the court if needs be. So again, it's the efficiency, it's the lack of friction, it is the expediting the process. Many people that use Solo Settle are able to get their debts settled in under a week instead of having to wait on hold for 30, 40 minutes, which is a very common process if you talk to consumers on a regular basis.
And if you take that on the attorney side of things, you know, I go back to my early days in this industry and being what we used to call fondly a road warrior, with a lot of windshield time going from county to county across not just Missouri, but Arkansas and some of the other states that we practice in. And we're taking that time to go meet the consumers in court. With a product and a tool such as Solo Settle, not only can the consumers resolve these issues faster, but so can we as attorneys representing our clients and help get the money in our clients' hands faster and really, you know, spending hopefully less money. Maybe we're able to get it resolved without having to expend filing fees or other court costs. And then at least for the attorney side of things, maybe we're able to get it resolved without having to pay attorney time out of the office or travel or mileage, or however your firm does that. And so I think that that is an important aspect to think about as well.
Well, your objective is communication, right? Like you're trying to invoke some sort of communication with that consumer, even if you're into the lawsuit process. And this seems like one of those triggers. Go ahead, Brian.
Yeah, if I could add, I mean, I think if I could sit in my office all day and just, you know, accept or make counters or reject, and most clients aren't going to reject, they're going to try to work things out with people. And like what Joy was alluding to, you can only be at one place at the same time. So like if you have to be in court, you can't be handling. And I think it's just a great technology play. And I think technology is where, you know, where the creditors need to be at, because it helps us to handle our clients. You know, we're not dealing with low volume, you know, clients, we're dealing with high volume clients. And if we could just settle cases, because, you know, they care about compliance, but they also care about liquidation rates and collecting money. And like I said, if I could just sit in my office and accept offers or get things resolved, it's a win-win for both sides. It's a win-win for the consumer, who is probably eating them alive. You know, that Solo provides them with a mechanism to communicate with the creditor. And then here we are, we can't prompt it. We can't get people to join Solo, but when we accept it, we can have that communication with the consumer. I mean, I think I've only had a handful. I know it's a lot more popular so far in other states, but I mean, I think it's a great way to know that the consumer wants to resolve the case with you as well.
And I think, you know, we often have, we'll call them repeat customers, repeat consumers. And so for those that are able to use a tool like this and find it successful, I know that you'll see them coming back time and time again, maybe for different clients that you represent, or maybe engaging with different law firms, depending upon, the world is changing. And the way that consumers want to communicate with us, and the most efficient and successful way I think that we are all finding to communicate with others is digitally. And this is a tool in that space that needs to be looked at.
So we had a question come across on LinkedIn Live, and for those of you that are watching live, I encourage you to ask questions. Let's participate in the conversation. And so this person said, who actually has consumers on hold for 30 to 40 minutes, and I would like to think that that also sounds crazy. However, the number one complaint that I read in Google reviews for debt collection organizations is either about not answering the phone, the amount of time that was on hold, or falling into the IVR death loop. So, as much as I would like to say, as collection agencies or as debt collection professionals in general, we should have that buttoned up pretty well. I wish that we had it a little bit more buttoned. Some organizations are really good at it, and they're managing those, even those Google reviews, and they've got their 5 stars. But there's still so many organizations in our space that don't do it. And it wasn't really until I had done the a consumer webinar with George from Solo that I realized really just the perspective of the consumer, right? Like, because we often don't think about what a jury of our peers really means, and I think the attorneys in the room can kind of understand that. And until you have some of those direct conversations, sometimes you lose sight of what their perspective really looks like.
Well, not to mention, Adam, of course, none of us have an ideal of having a 30 to 40-minute wait time. That's atrocious for any of us in this industry, and we definitely wouldn't want to be servicing our clients that way. But life happens, and we have, humans oftentimes answering those phones. Or if you don't, you have maybe technology glitches. Perhaps you have a holiday time and humans who call out sick or something like that. You never know what could happen on any given day. And I'm also aware that that does happen from time to time in our industry, as much as we don't want it to, and make efforts to mitigate those circumstances.
Yeah, but I talk about the Google reviews too, right? Like, some of that might be exaggeration too. They were on hold for 2 minutes and they're calling it 40 minutes. So, I want to find some level of balance to it. But I definitely, it's something that I combat every day. Go ahead, Brian.
Well, I think, the thing about Google reviews, it's just so easy to follow a Google review. Same thing with Solo. It's easy for them to get on there. I think the good thing for both sides as well is it allows you to get the documentation that you need to file in court, and really so that it gives the consumer knowing that it's resolved. It's not like they're having to wait for us to get the documents to them. It can be done on site. And I think also also Solo has the capability to accept the payments. And I think that, if you know that everything's being done and you don't really even need to, because they want to just know that it's resolved as well. Like, we want to get it resolved, but the consumer wants to know it's resolved too. So they, they can put this off check this off as something they have to do, take care of, and move on with it. So I think just the technology and it's easy to get on, just like it is. We have some, like you said, I think all of us have, bad reviews about, like, who are these people? I don't know why they're calling me. It's easy to get on Google reviews, just like it's easy to get on here and resolve cases. And I think a lot of times people do Google reviews because they don't want to deal with it. And so they're trying to, so they can also get on here instead of, this could be sort of a mechanism to resolve a case. And I'll tell you, like, in my Alabama cases, we have that ODR case. I know we've talked, Joey can handle it, use it as well. And I've spoken to with Yale before. It's only in our small claims cases, but it's similar to Solo, allows the, it's only like 20 to 25 counties right now in Alabama, but it allows them to make offers to us. And I think any type of technology is great for both sides. And it's really good for the consumer because it's, they're not having to be on a call, wait for 30, 40 minutes. They can send an email whenever they want. They could be up at 3 o'clock in the morning. They could do it at 3 o'clock in the afternoon. They can do it whenever it's convenient for them. Make the offer, and then since just like us, it can be convenient for us. We might not get back to them for a day, but we'll get back to them shortly because we want to get resolved just like they do. So.
Yeah, I think that's an interesting aspect that when I originally spoke to Solo that they mentioned is they said we had a realization that the customers and consumers coming to them had a desire to resolve their debts and were looking for assistance in doing so. And, they kind of, I think, have made some pivots because of the realizations that they've had and really understanding their audience and the situations they're in. And I know that one of the beautiful things about Solo is I can sit there and see what my clients are getting percentage-wise on a settlement value. And I can tell you that it is higher on Solo than some of the other types of debt settlement companies or avenues that we're working on consumers with. And that's zealously representing our clients as we're to do.
Well, that is
and
the
I'll-
underlying objective, right? But let me go back to the practicality from the beginning. So, look, and I've worked with pretty much everybody on this call at one point or another, but what brought you to the conclusion of I need to go and try these tool sets? Like, what was what was that decision factor for you that moved you towards, okay, I got to go start testing this? And what were you looking for in that evaluation, like making that decision?
I'll be honest, Yale contacting me and having me look at the dashboard and the platform that already existed for consumers that were working with our law firm and talking about its capabilities, and then Solo and Yale included, inviting creditors to join in the conversation with them to develop and make their product meet us as well where we needed to be. That was huge to me, to recognize that, honestly, to service their clients, it was smart of them to make sure that we were finding a place of mutual resolution. And that's what we're doing almost all day long. Yeah, sometimes we're actually getting into heavily litigated, disputed cases, but let's face it, we all know that over 90% of our cases are finding a mutual resolution. And that is the most efficient and economical way to resolve your lawsuits, no matter what they are, including in our industry. And so and it wasn't just lip service. The fact that they took the feedback that they were getting from various creditors and started implementing it and continue to do so. One of the problems that we see, I just heard my paralegals complaining about it today, the multiple back and forth communications from powers of attorney and other debt settlement companies, when we can on Solo Settle say, this is our final offer, like take it or leave it, you're done, that
So
came
you find that the communication process back and forth during that negotiation period, or really any communication, you're finding to be smoother and better documented in terms of what you then need to bring forward to bring the whatever matter to a final resolution.
yes.
Okay.
And I think with the debt settlement companies, they seem to have not always the best reputation with us. Like they'll make the offers of the 30-40% settlements, and I think Solo is not really it's not a debt settlement company. It's just a platform for communication between the consumer and the creditor attorneys or the creditors, and it just gives them the ability to get on there and make their. And when I think I was receiving some answers before that were Solo, before even Yale was involved with the company, and I know it gave us phone numbers and emails, and we would use that information to try to reach out to them because we're just trying to resolve cases. I think with bringing Yale on board, I think that sort of brought. He like you said earlier, he's ran a law firm, a collection law firm for years, so he knew the perspective what we're looking for. Like I said, we're not looking to deal with debt settlement companies. We're looking to deal with the consumer who is just trying to resolve it, and they initiate it. So we don't initiate it, but it's just it's a mechanism for us to communicate, and it allows I think it's really one that is something that's beneficial or really takes into concerns of stuff that the creditor law firms would be looking for in a platform.
And Adam,
Okay.
real quick, so consumers are in control, so they are initiating this, they have the intent to pay something, which is great, and these are the kind of consumers that law firms and collectors want to talk to. And the settlement rates is all done by them. Solo has no influence over the collector. The collector makes the consumer makes all the decisions in the process about how much to offer and over what length of time. And the settlement offers we see are unbelievable. We see lots of people settling at 100%. Our biggest categories of settlements are in the 80 to 90% area. So consumers want to get their debts paid. They want to take responsibility for the debt that they have, and they want to pay this off. So we are providing to collectors and law firms intent-ready consumers that want to pay, and they want to pay something significant. Yes, we do have the one-off cases where people offer $100 in a $10,000 case, but that is the exception, not the rule. The number of people paying 100% of the debt or 95 or 90% of the debt blows my mind some days about how much that is, because these consumers want to pay, they have that intent to pay, and they want to get this resolved.
Yeah, and Brian mentioned the fact that, Yale and he and I are all law firm owners or have been law firm owners. And that dashboard that we keep talking about, I love being able to just periodically pop on there and see a firm-wide vantage point of how the attorneys and paralegals are resolving those cases in our office, that they're staying on top of them, and what those settlement percentages are.
So I want to come back to the dashboard in a minute and kind of talk about operationalizing it within a law firm. But yeah, we talk about these settlement parameters or these settlement offers that are coming in that range. What do you think is prompting that type of differential compared to other channels?
It's because our platform takes out the emotion. They boil it down to dollars and cents. And when the emotion is taken out of the equation, people are able to make better offers because they understand that they have to pay this debt and that they have a law firm or a collector on the other side that is there making counter offers and acceptances. And it goes back and forth like in a free market to get to a amount that the law firm or collector can accept and that the consumer could afford to pay. So it is really a great experiment of success that these consumers were able to get these things resolved at this high rate.
I definitely would call it a success if we're talking about 80, 90, 95% settlements. No question about that. But I'm curious about what is driving the consumer in that trigger. And taking the emotion out of the equation, like we've talked about the shame factor, and I've talked about that on a variety of podcasts and webinars. But just kind of thinking our way through how, what is that consumer experience like? And the more that you can remove that emotion, I think probably the better off we are in terms of bringing everybody together towards a final resolution. Now, Joy, you had been saying something about kind of how you're looking at the dashboard because you're running a firm that's in a lot of different jurisdictions, right? You've got a pretty wide geographic coverage area. So as you're talking about it from the perspective of a larger firm, how are you able to leverage this technology within your organization itself? Is there a single point of contact? Is it everybody, is going in? Like, what does that look like from a larger firm perspective?
There's definitely more that can be done here. Right now, where we're at is pretty interesting, and we have attorneys, young attorneys, middle-aged attorneys, attorneys that may be older, and so they all have different ways that work for them to be successful. So some of our attorneys are still engaging through, email platform or the email communication with Solo, that Solo can facilitate as well. Some of them have paralegals that they work very closely with and working on these. Some of the attorneys are going onto the dashboard and doing it themselves. So it allows for flexibility within your staff, which I think is interesting and important. There's probably some more automations and other things that we could develop is what I'm indicating to. I'm sure there's more room to go forward.
There's always room for automation, but you've still got so you still have a bird's eye view of what is happening across the entire organization, and then the individual attorneys are able to handle the cases that relate to their workload.
Right. From my, unique seat, that's what I want to be seeing is how is it working? Is it working? And what else might we be able to do with it in the future?
Fair. Now, Brian, from your perspective, how do you engage with, or how does your firm engage with the platform?
Well, I mean, it's like I said earlier, we haven't had as many, but the ones that we have, we actually we have attorneys they handle certain clients, and so they would be segmented out that way. We haven't automated yet. We just have them get on there and take care of communicating with the consumer for the ones that they're responsible for. But I'm like, I know you're a big fan of automation, and we're moving in that direction. I think that's probably something that all collection law firms should be looking at as far as somehow getting Solo to communicate with our collection software system.
Fair enough. I mean, I think we're all looking for whatever opportunities we can to automate processes, but I think one of the biggest challenges we have as an industry is engaging the consumer to communicate. And when we can get into a framework of being able to communicate, I think is where we could start solving some of these problems. As law firms that have deployed this and have started kind of going through the process of engaging with consumers through the platform, have you seen any additional risks, or do you perceive any additional risks that kind of come with the benefit? Right, there's always a risk versus reward probability. We can clearly talk about the rewards, but have we seen any increases in risk?
I don't know about an increase in risk, but we must not forget the risks. Just because you're communicating in a different form doesn't mean that the same rules don't apply and that the risks don't still exist. But I do want to go back, Adam, and kind of touch on something that you were speaking about with the communication aspect. And Neil mentioned this earlier. Everything is driven by the consumer. And that means whenever you're talking about being able to use this technology to drop a consent judgment or something of that nature for the consumer to sign off on, you're not waiting for this third party to I got to talk to this guy and I got to talk to that guy and I got to get it back. You're not waiting for it to get lost in the United States Postal Service. It is much more of a direct interaction, I feel like, with the consumer, which expedites and I think leads to increased agreed judgments in those situations.
I think that makes a lot of sense. We had another comment that came in about how businesses change and how Solo has kind of evolved their business model here to be that communication point, which I think is insightful. As you look at or as you think about how others may be avoiding the technology at this point from a law firm perspective, what message would you have for others that are kind of evaluating this from the outside?
Well, personally, I don't think there's much of an evaluation. I think it's another, like I said, it's another tool to resolve cases. I mean, you're not going to just use Solo. You're going to use other, you're just going to add it to what you're using already. It's just another way to communicate with the consumer, and it's really prompted by them. And I'll go back to something I mentioned before when we were talking. I know there was a study that was done in Maryland about I think it was Baltimore County or something. I don't practice there, but it was brought to my attention, and they were talking about the fact that they're looking at all the default judgments. When we file cases and we get them served, we're not looking to get default judgments. I mean, we'll take them. We want to get resolution of the cases. We want to get, we want to be able to say we can satisfy the judgment or dismiss it because it got resolved. That's what we're looking for. So if there's a way that we can use technology, a phone, letter, anything to get resolution on cases, that's what we're looking for. We're not looking for paper judgments. We all have tons of those that we just, have in our system or scanned in our system, or that's not beneficial for our client. It's not beneficial for the consumer. So really, any type of mechanism that we can communicate with the consumer is great for all collection law firms.
Yeah, we're looking for results, and this is a tool that gets you results.
Well, and you can't get to that result without a communication, right? It
Correct.
comes back to what can I do to prompt the consumer to actually communicate with me? And I think that's how we got into self-service and digital technology as an industry to begin with, because will they respond to a text message? Will they respond to an email? Will they respond to a phone call? Will they respond to smoke signals? Whatever I can do to try and get the consumer to engage in some sort of a conversation, I think starts moving things down the path. Now, I'm curious, Yael, as we think about and we talk about these settlement rates in that 80 to 90% range, do you think that part of that is, or do you see a difference in those settlement rates depending on where an account is in its life cycle? Meaning, if it's already gone to litigation and we've already got suits filed versus if maybe a collection agency was engaging with the platform, without the threat of litigation as part of the discussion.
Oh, of course. So we do have a number of agencies on the platform already, and their settlement rates are lower because they don't have that threat of the lawsuit or the pressure of the lawsuit on the consumer. But on the legal side, which is what I know the most about, consumers want to get these cases settled. They do not want garnishments. They do not want bank attachments. They want to get the cases resolved. They want to communicate digitally because they don't want to talk to people. They don't want that friction. They don't want the emotion. They don't want to experience the shame of talking about why they haven't paid their debts. So the Solo Settle platform is a communication model that allows people to communicate digitally without fear, without shame, and without friction. And that's what people like. And like my kids who are 24, 22, and 19, I tell this to people all the time. They never pick up the phone. Their entire communication skills are texting and email and digital. So why would we expect the younger generations to try to settle their debts over the phone when they don't have those abilities and skills to do that? And this is what Solo Settle provides.
And also it's a neutral site too. It's the difference also is the fact that there's not a bankruptcy or consumer attorney behind it. It's a neutral platform that and they're not going to be offering 30-40% that we're not really going to entertain. It's just providing a platform for people to communicate. I think that's also probably a difference in why the numbers are more reasonable, where results can happen and things get settled, because it's not we're just going to ignore the 30 those consumer attorneys that are trying to just
Lowball.
whatever, but they don't they're not trying to, we're trying to get a reasonable resolution that's win-win for both sides, not just for themselves. So
Okay. And then we educate them, Adam. We tell them, if you don't answer your lawsuit and a default judgment happens, you get court costs, you get interest, you get garnishment fees, you get bank attachments. It drives up the cost of the debt. So if you could settle for 75, 85%, you're winning. Because otherwise, if a judgment is taken against you and attorney's fees might be awarded, court costs are added in, garnishment costs are added in, your $5,000 debt could easily be $7,000, $8,000 in 3 to 5 years. So if they could settle
post judgment interest.
right? Yeah. So again, that's what we try to sell to consumers and educate them about the process, about what happens if a judgment is awarded versus settling the case. So we tell people your best option is to settle unless you have a true defense or issue with the debt, but most people don't.
A common theme through all this discussion that I'm hearing is evolution. I think we have an evolution of solo suit. I think, we all know the days where we saw solo now, but it used to be solo suit, and we would have, them helping to file answers or counterclaims. And I think it's important that we address that and that we see the evolution that solo has come to, where, I wonder, how did you have happy consumers when they got into a more litigious situation, or do you have more happy consumers now when they're able to resolve a debt and have it off their shoulders? I go back to the evolution of society. I think Yale brought up a good point. I too often look at and observe and my children who are of similar ages and interacting in the same way, and the evolution of how we're practicing law and communicating with people.
And the efficiency of digital communication, as Joy and Brian both know, is 100-fold. It's so much easier to digitally communicate via Solo Settle. It takes 15 to maybe 60 seconds to make a response compared to talking on the phone with somebody for 20 minutes to understand what their issues are, get through the validation process, get their budget information. We collect all that for them in Solo Settle. We provide it to them on the platform. They can see it. They can see what their situation is. They can see what their budget is and their cash flow statement. And Solo Settle does a great job of memorializing all the communications back and forth. So it's there for the law firm to see, the consumer to see, and there's a documentation of every step of the process. And then every time a check is made, a payment is made, we let the law firm know that a payment has been made. We put it in the notes so they see what the date it was, how much was paid, and then Solo Settle sends them a check or ACHs them the money.
I mean, shortcutting the process. Now, when we talk about the digital communications, I definitely agree that, and it's been my experience that the consumers want to communicate with the collector generally through the same method and how they took the loan to begin with. So, if you're talking about a younger online consumer, they want to do self-service, text message, email. If they physically, went into the bank and filled out a credit card application, which I feel like is a really specific generation, but if that's the case, then they probably want to be communicated with over the phone, preferably a rotary. But I think people tend to go back to whatever kind of technology, however they took out the loan is, I think is how they want to communicate with the creditor, and it's how they ultimately want to communicate with the collector. And I think we've seen that for a couple of years now in terms of its evolution. But these younger consumers, especially as we're talking about fintech debts, auto loans, because so much of that is happening online. I mean, I've never considered the day of actually purchasing a vehicle without ever seeing it, but you do see that online every day, right? Like car gets delivered to their house. Uh, so I think as the world is changing, it's important that we continue to evolve with it, and that we're going to communicate with those consumers in the channel in which they're going to be most comfortable. That was the only thing that we're is right. It was the only
Groceries are
KPI
getting
now.
delivered to the house, and
Everything.
their entertainment's getting delivered to their house, and now they're solving their lawsuits from their kitchen or living room.
Well,
Right.
Adam, what's the average age of people that go into a bank? I mean, I bet there's a lot of 20-year-olds that have never even been into a bank. But you might
I
have,
concur with that assessment.
you have a lot of 60s and 70-year-olds that probably go into, and that's just what they're used to. That's what they want to deal with. But you have a lot of people that don't want to. That's just not how they communicate. So.
But I don't think we.
No, the majority of people I see in the branch are underbanked, right? They're people who don't have a bank account or that capability of doing some other kind of digital payment, so they're there to physically cash a check.
Yeah.
And I don't think we want to discount the fact that, people do change a little bit with technology. I'm sure, and that most of your research is matching up with that, Adam. But I think about even like my grandparents who, were born when party lines, they were of the type of party line, and now they can text, and I'm like going, okay, that's amazing.
Yeah. The people will evolve with the technology, but I think that there's a clear correlation between how an account is originated and how the consumer wants to communicate at the end. And I think the law firms have been slower through the years to adopt new technology, and that may be changing now. And I think there's different use cases for the different types of debt collection organizations, but a lot of law firms have not been forward thinking and getting off of the phones and into digital texting, email management, and all of that. So I think having a platform that kind of closes some of that gap for some of the firms. Look, I know your firm is significantly more advanced in terms of how you're communicating in that outbound effort, but not everybody's quite there. So I think being able to kind of fill those gaps and provide the consumer with one of those pieces. Now, the other thing that I think is interesting when I think about the methodology here for bringing an account to resolution is that you can continue to reach out to that consumer, right, repeatedly throughout the process. The originating creditor tried to reach them and resolve this. There may have been an agency placement between there, but SoloSuit is taking a different advertising approach. They're not necessarily going through that same. They're not going to SoloSuit because they saw you on the credit report. SoloSuit is kind of rounding up some of these consumers on their own through their own content to bring more people to potentially the table for these settlements than we would have seen otherwise. Am I thinking about that the right way, Yale?
Yeah, that's totally correct. We do a lot of SEO, SEM, paid search that drive consumers that are being sued or being collected on by collection agencies to educate them about what to do when you get that notice. What does a summons and complaint mean? What's the deadline to file an answer? And we try to educate them to provide them some tools to understand the legal process. Many people that are not loyal to us on this call, it's a very confusing, archaic system that is very intimidating to the uneducated person. So we provide them with videos and blog articles and to help them understand what is going on and what they need to do.
Yeah,
Well, educating them is always an important part of the process.
Sounds like taking some of the fear out of it so we can get down to the nuts and bolts and the objectives of resolving the matter.
Right, as we all know, the worst thing to do is have somebody stick their head in the sand and hope it goes away. That is absolutely the worst decision to make.
Never goes away, right? Like debt collectors never just disappear, but
Correct.
by engaging in the conversation, you can actually get closer to a resolution that makes sense.
Well, they
That's why
finally
we all.
they finally get in
Right.
touch with you after you file a garnishment, which is towards the end that they should have gotten that they should have hopefully gotten started the communication way before that, where they don't have as much control. At the beginning they have control, and then as time goes on they lose that control with the legal processes. But again, we're just trying to get it resolved. So I mean, really, if they call at any point, it's better than like Gail said, it's better than just putting your head in the sand and not doing it ever. So.
Yeah.
Well, if they just put their head in their sand, they're going to end up with a default judgment. You're going to get a garnishment, or there's going to be an asset or something else at a different point in their life when it's not at the top of the mind, and it's going to feel like a surprise. But I every time that I talk with a consumer about resolving their debts, the number one piece of advice I have for them is communicate. Like hiding helps nothing, and definitely don't just avoid the fact that you're being sued. Like you need to talk to that law firm. Like you need to engage in some level of communication, because otherwise it is a default process.
And let's not forget about how much the courts appreciate and like it when we're able to go in and say that we're dismissing a case because it has been paid in full or settled in full, or to receive that signed, mutually agreed upon consent judgment versus the defaults or setting trials and litigating further.
The theme of this webinar should be communication, because that's what it all comes down to. We need consumers to communicate with the collectors. Collectors can't get people on the phone. They send letters, they make phone calls, people don't pick them up, and they kind of feel comfortable with solo to communicate digitally, and that's kind of what our spice is we have something that makes the consumer comfortable to actually sit down, communicate electronically with the collector or the law firm and try to get their case settled. And when they do that, when they communicate, guess what? It happens. They get their case settled, they avoid garnishment, they avoid bank attachments, and sometimes they even avoid a judgment.
Yeah, by the time it gets to us, they probably are, the creditor and the agencies have probably already called it 100 times or sent tons of letters. It's again, I don't, like you guys said, it always goes back to communication. But there's so many different opportunities. But if an email or a platform can prompt people to settle cases, I think that's great. Solo is just, like I said, it's just a tool that you use to try to settle cases. It's and it's effect. I mean, that's why when you said ask the question, like, is it what made you go to it? It's like I don't think there's really a decision, because it's just an extra tool that you can help resolve cases. Because we have a lot of cases, we have a lot of accounts to handle. Whatever way we do it, whether it's letter or email or text or solo, it's just another opportunity to settle cases and resolve cases.
So from your perspective, this is another communication method, like an email, text message, phone call, right? Or accept the settlements through that platform. But I mean, communication is key. I don't know how else to put that. Like that's the number one piece of advice that everyone should be giving to consumers as it relates to debt collection. I mean, that's not what they see on TikTok. However, it is the most realistic resolution for them, is to have some sort of communication. I mean, some of the stuff that I see on social media in terms of the other advice that they're getting is scary, to say the least. I saw a video last night about, it said something about, never pay a debt buyer because they bought the debt and now they owe it. Like, I mean, and then they'll put like a U.S. code or statute like listed there, which clearly is not even remotely accurate. But getting them past that and into a real communication channel, I think, is the underlying objective.
It probably came from ChatGPT. They probably just made it up.
It wouldn't, honestly, it wouldn't surprise me at all, because some of them, I mean, I go out there looking for this kind of content because I really wanted to understand, like, what is the consumer seeing out there online, and what what decisions do they have? So it was really at the beginning of 2025 where I started looking at like behavioral patterns and saying, how does behavioral analytics play into what we do as a debt collection industry? And how can we start leveraging behavioral science and just trying to understand it more? So I spent a lot of time over the last year with debt settlement organizations, credit counseling, and just trying to understand kind of the debt relief space and what does that all mean in terms of the options for the consumer. And then doing the webinar with George and looking a little deeper at having like these direct conversations with the consumers, it's given me a lot more perspective over the last year as to what is the consumer actually dealing with. And I think that the online presence and being present on social media and the other places where the consumer is going to check it, because they're going to get an email, they're going to get a text message, or they're going to get a lawsuit, right? They're going to get knock 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 service. Now I've got this. What's the first thing I'm going to do? I'm going to go look up the company that's suing me. I'm going to go look at the law firm that's suing me, and I'm going to try to understand who these people are. And so having some sort of an intermediary in the process, like having a solo settle in the process, I think could potentially add additional value, because now they're feeling like there's a referee in the room and maybe coax the consumers out of their shell a little bit and into that communication channel where we can have a real discussion.
And again, going back to the time and the availability of the platform to communicate with us if our offices aren't open to answer phones or not during normal business hours or things of that nature.
Go ahead, Yale.
And to pick up after Adam's about a referee, we call ourselves a neutral mediator. So we just provide offers back and forth, counter offers back and forth between the consumer and the law firm or collector to try to get cases settled. We don't tell consumers what to do, and we don't tell collectors what to do. It's all a free market. We will pass through any communication that we receive.
So I know we've got a couple of people here watching live. If any of you have additional questions you'd like to ask, we're coming into kind of the tail end of our discussion today. So I want to just kind of open that up if there's any additional questions that anybody wants to introduce. But short of that, Yale, any final statements or message that you would put across to our audience today in terms of what your objective is and how your company has evolved to where it is today?
Our objective is to tell people that aren't using solo settle that we're not the solo settle of the past. We have done away with motions to compel arbitrations. We have done away with debt validation notices. We are truly now a neutral mediator. We do not take a consumer side. We do not take the collector side. We are here to help facilitate meaningful and productive communication between collectors and consumers back to collectors. It is all consumer initiated, and consumers have the intent and desire to pay off these bills. And we are out here today trying to get law firms and collectors to further engage with solo settle, like Joy and Brian does, and lots of law firms and collectors around the country are doing. They see how easy it is. There was absolutely no cost to collectors to use the platform or law firms to use the platform. The consumer is so interested in getting these cases resolved that they're willing to pay a small tech fee to help underwrite the cost of the technology in our platform to try to settle their debts. It's been a really breath of fresh air for me. Solo is a true tech startup. Things move very fast, as Joy and Brian has said. We implement changes and suggestions every 2 weeks. We hear what the law firms want. We hear what the consumers want. We do lots of consumer interviews. We talk to collection agencies and law firms every day to say, hey, how can we make this better for you? It is a evolving platform that is cutting edge technology, really smart engineers from Stanford and other places around the country, and they really know what they're doing, and it's been great.
So, Yale, I did have, as you were talking, I had someone ask about the cost. So just to make sure that we heard that correctly, that there is no cost to the collection side. The consumers are paying a small technology fee on their side, and so there's really no cost on the creditor side.
Correct.
Okay.
And it's
just wanted to make sure I hit that one more time, since it was a specific question and it didn't get lost into that response, because you covered a lot of pieces there as well. So Joy, Brian, any advice for those that are watching in terms of those that are kind of currently evaluating what might come next?
I would say that earlier at the beginning of this conversation, Yale spoke about credit and the individuals who have a need for credit, but credit is not just there for those who don't have cash, it's there as a tool. And and even those people, miss something or get delayed or procrastinate, and even those people are going to be able to utilize Solo to hop on and be like, I need to take care of this real quick. Getting involved with Solo now, having a voice in the room to make it better for your firm, for your clients, for your agency, I would highly recommend.
Yeah, and I'll add, I think it's for the collection firm, collection agencies, it's really like a no-brainer because there's not really, it's just a way we can communicate. For consumers, I think it's a great way. I would sign up for something like this because I think it's provides them with the ability to communicate with with someone on the other side you're gonna be able to resolve your financial issues where you have a say in the matter. Because when you make that offer, it's going to be a yes, a no, probably not a no, and then most likely a counter offer. And there's not really any, it's just a way that they could gauge where they're at and figure out how they can resolve it. But if you don't do anything, you're never gonna get it resolved where you have any control of it. You might be able to do it through Solo. You might be able to do it at court because a lot of times courts are trying to force the parties to resolve cases. But it just gives you that way where you can sit at home and make an offer and hopefully try to resolve financial matters that you're having to deal with. So I think it's for our side it's a no-brainer. For them side, for the consumer side, it's a way that they can resolve things that are probably eating them, probably negatively affecting them, where they can actually have some control with the results.
And there's not a lot of room in this communication platform for inefficient conversation. We all appreciate
Not a lot of additional story.
polite and nice and talking about the weather, but this platform cuts straight to the point of what we're trying to communicate about. And I think that's another important aspect we haven't touched on yet.
Yeah, Joy, that's a great point. The efficiency of it is phenomenal.
Well, it sounds like now is the time for people to reach out to Yale and have a direct conversation on how they could leverage Solo for their own creditor or collection businesses. But thank you guys so much for joining me today, coming on, sharing your insights. This has been a fun discussion, which I knew it would be when I was going to have the three of you to talk to today.
Thank you for having us and taking time to look into it more, Adam. We appreciate it.
Yeah, appreciate the invite.
Yeah, thank you, Adam, for doing this.
Absolutely. For those of you that are watching, if you have additional questions you'd like to ask me, Yale, Brian, Joy, you can leave those in the comments on LinkedIn and YouTube, and we'll be responding to those. I also saw some comments here that I started tagging Yale in so he can reach out to you directly for an additional conversation. But thank you so much, everybody, for joining us on LinkedIn Live today, coming to you live from South America in Brazil, and looking forward to seeing many of you at the ARM-AI conference coming up here in just a couple of weeks. So thank you, everybody, and we'll see you all again soon. Bye, everyone.
Thank you, Adam. Thank you, Brian. Thank you, Joy.